Hi buddies, this is CA Vardhaman Rakhecha I. Welcome to ATS, India's leading broking house which provides zero brokerage for both intraday as well as delivery transactions. The due date is nearing and the government is calling you all to file your returns. And in this video, we will also give you one bonus tip relating to stock market taxation. So the due date for non-audit individuals, HUF, partnership firms, and trust LLPs who are not required to get their books audited is 31st July. And some points which you should consider while filing your returns are: first point, now you have two tax regimes, the old tax regime and the new tax regime. As you can see, the taxation slabs in the new tax regime are lesser when compared to old tax slabs. But you need to be mindful of the fact that certain deductions and exemptions are not available in new tax regime, and accordingly you should choose which tax regime you want to be taxed under. Now, talking from stock market perspective, always remember to set off your short-term capital loss as well as long-term capital loss. Short-term capital loss can be set off from both long-term capital gain as well as your short-term capital gain, whereas long-term capital loss can be set off only from long-term capital gain. And long-term capital gain is exempt up to 1 lakh rupees, and if you have any long-term capital gain in addition to 1 lakh, you can set off your short-term capital loss and long-term capital loss with your long-term capital gain, and the bonus point is in the end of the video. And most salary people complain that they don't get any deductions. Like if you see business owners, they get deduction for depreciation of their car or the salary which they are paying, rent which they are paying, but the salaried employees don't get such deduction. But now you can get 50,000 rupees as a standard deduction for all the salaried employees. And fourth point is that you need to remember to disclose all your income, whether your income is exempt or taxable. Disclosure is required. For example, PP of interest and share of profit from partnership firm, although they are exempt, but you have to disclose it. And also if you have bank accounts in multiple banks, but you need to disclose all the bank accounts. Some people will be there who will disclose only a one particular bank account where they have major funds, but they need to disclose all their bank accounts. Even if they have foreign assets, then disclosure of such assets is mandatory. Now, talking about one bonus point is that many people will be there who will have only short-term capital loss or long-term capital loss, and they may not have any other source of income. So they may feel that they don't have to file their return, or they may feel that they need not file the return within time. But remember that if you want the short-term capital loss as well as long-term capital loss to be carried forward, then you need to file the return within the due date. Then only it can be carried forward. So file your return within time if you are in loss, and rejuvenate yourself and be back next year and keep following ATS, because if you keep following us, surely you will be most likely in profit next year, and then you can set off these losses. So I would like to conclude that there is no avoidance in delay, meaning that you have to file your income tax return, whether you file it now or you file later. You cannot avoid it. So it's better that you file it now so that you can avoid interest as well as penalty. Thank you all.